Over the last while, lumber's price has, of course, completely exploded. So in this video, I'm going to be looking at Canfor, which is a lumber company, to see, can we still take advantage of this insanely high price? Hey, my name's Tucker Krause. I'm a 14-year-old investor. In today's video, I'm going to be doing a stock analysis on the Canfor Corporation as well as Canfor Pulp and Paper Products, as they are two separately publicly traded companies on the Toronto Stock Exchange. Because of that, all dollars in this video are Canadian dollars. That's definitely something to keep in mind. So let's see, can we still take advantage of lumber with Canfor? Before we do that though, make sure to smash that like button. Now, let's get into the video. To make it a little bit easier, I'm going to be referring to Canfor Corporation as just Canfor, and I'm going to be referring Canfor Pulp and Paper Products as just Pulp and Paper, just to make it a little bit simpler. So now let's get into a quick stock and company introduction. Canfor trades with the ticker symbol CFP at $30.70 per share, and they have a market cap of $3.844 billion. They have a PE ratio of 3.69 and no dividend. Pulp and Paper trades as CFX and is trading at about $9 per share and a market cap of $587 million and have a negative EPS, therefore negative PE ratio. And they used to have a dividend, but they got rid of it with the onset of the pandemic. Of course, they're both a part of the basic materials sector, with Canfor focusing on softwood lumber, engineered wood, and other specialty wood products, and Pulp and Paper obviously focused on manufacturing pulp and paper. They largely operate in Canada's westernmost province, British Columbia, though they do also have mills in the United States and Sweden. The main growth prospect, of course, is that lumber price has completely exploded, which definitely has been shown in Canfor stock price, though they still have a PE ratio of an absurdly low 3.69. And yes, it's very possible that with how high the prices have gone, that it could correct soon. Because it's at least partially to do with inflation, it's very possible that it can rebound or keep going, but you'd want to do more technical analysis on that. Another factor to keep in mind is that real estate, which requires lumber, of course, is going crazy right now, though it should definitely be noted that it does look like that is going to stop or correct soonish, because you can see different statistics that show. One example is that housing prices are rising faster than they were pre-2008, so it definitely seems like you don't want to be completely relying on that growth aspect, because don't know how safe that one is. A dangerous factor to definitely keep in mind is that because they operate largely in British Columbia, it's very prone to forest fires, and of course they're, a lumber company, of course they need a forest. Notably, in 2017, there were forest fires so bad that 65,000 people were evacuated, and it had the largest single wildfire in British Columbia history. There was also the longest state of emergency ever in British Columbia history, as well as a total of over 3 million acres burned in that forest fire season. 2018 had the largest total burn of a forest fire season in British Columbia history, and actually had smoke go nearly as far as Ireland, that it shut down air travel in BC and across lots of Canada, with about 3.2 million acres burned in total that season. Though Canfor kept growing, we'll get into that in just a second, so it definitely seems like they are able to handle that kind of thing quite well. So you can see over the last 10 years that Canfor's revenue has been steadily increasing, though there was a drop-off in 2019, which is quite interesting due to the fact that the major forest fires were in 2017, 2018, and there was still growth those years. So you can see that Canfor's earnings per share is definitely all over the place, especially compared to their nice steady revenue. This is likely because they've been consistently expanding their operations during this time as their revenue has been steadily increasing, and in just some years they am spending a whole lot more, such as 2015. Not to mention, in 2019, even though they only had a small drop-off in revenue, their earnings per share got absolutely hammered, which is because Canfor doesn't exactly have the highest margins. Prior to this lumber boom, I believe it was only in the range of 8% or so from my analyzing. And now you can see that on the far right, the average, they're still overall been generally profitable, although some years it's definitely gotten close to negative, other than 2019 and 2011. Pulp and paper revenue is definitely more all over the place, though from 2012 to 2018 it was roughly going up, although since 2018 it's definitely been going on a decline. I know their largest customer is China, so it's very possible that maybe China has started to buy from more close by sources or something like that, but it's definitely scary seeing that drop off. Now their earnings per share is also all over the place, but it more roughly follows their revenue. As you can see, it was mostly going up from 2012 through 2018, but still had that drop off in 2016. Though you can also see in 2019 and 2020 that their earnings per share was negative, along with their declines in revenue. Though on average, they were still positive, just not as much as regular Canfor.
Do note that they were actually positive in 2021 Q1 with a 13-cent EPS.
So it seems like Canfor is a profitable, growing company, and it seems like pulp and paper is on the decline, though they are still generally profitable. So for a quick floor value, I did a asset-based model, and so for Canfor, that came out to $61.32 per share, which is about double what they're trading at right now. So that's really, really good. And then pulp and paper came out with a floor value of $20.17, which is actually a decent bit over double what they're trading at right now. So that's again like insanely good. But let's see, does their intrinsic value also hold up? Because just on the surface, that's really good. I only used their Q1 report for that asset-based model, since that would be the most up-to-date balance sheet, whereas for intrinsic value, you need a full year income statement and cash flow statement, that sort of thing. So I used the 2020 full year statement compared to the Q1 2021 statement for intrinsic value. I decided to use Phil Town's intrinsic value calculation for this stock due to the fact that normally I would use discounted free cash flow, but that requires a lot of projecting and whatnot. And because Canfor has been growing quite a bit, my earnings growth rate actually came out to 21% using the Phil Town moat and management analysis method. And so there was no way I was going to use discounted free cash flow for that. And so let me get into what the intrinsic values came out to. And I have 3 scenarios here. Now, my intrinsic value for Canfor in my first scenario came out to, I kid you not, $376.36. They are trading at $30.70 right now. So let me get into like kind of behind the scenes of this calculation, just to show you that I'm not being like completely stupid here, but also to explain what the difference is between these scenarios.
Alright, so first off, this document isn't mine. I downloaded Phil Town's website, and because it was originally an Excel 1997 document, I just added some modern edition, and I have little notes for myself here and there. And so first, how did I get that insanely high 21% earnings growth rate? Well, all I did was got all these different growth rates. So for earnings per share, operating cash flow per share, sales, book value per share, ROIC, ROE, average those all out. That gives you that. That's exactly what the document says to do. So that's what I did. And so you can see, okay, wait, why'd you only do 5 years ago instead of 10 years ago? Aren't you supposed to do a 10-year average? Yes, that's normally true, but in 2011, 10 years ago, yeah, that's negative 40 cents per share. So I thought, okay, 2016, that's 5 years ago, that's a nice round number, and it's really close to the average, so that's fair. And so you want to hop back out of there. Oh yeah, now what about that insane 41 PE? They're trading at 3.69 right now. Well, what I did is, first off, you can see that they used to trade in the 80-90 range, even in the 40 range right there. Although, to be fair, more recently, it was sort of in that 10-15 range throughout a lot of their history, that 10-15 range, to be entirely fair. So, like you can probably see right here, I then went on to Yahoo Finance. Their forward PE was 9.97. When you put that in, their sticker price drops to /intrinsic value drops to $91.05 per share. But still, you can probably see, oh, wait, $8.32, $4.35, that's different. Well, that's because this is trailing 12 months, which is substantially higher than just their 2021 earnings per share. So then I tried, okay, let's just try their 2021 earnings per share, because that doesn't take into account as much this giant lumber rally that happened in Q1 2021. Well, put in that, and you can still see their sticker price is /intrinsic value is still $47.60. It's a margin of safety. You do kind of have to drop it a little bit to about 30%, but still, 30%, that's still not half bad. So in general, you can see that these calculations aren't quite as outlandish as they initially seemed. Now on to pulp. You can see negative, barely a move. That's actually not too bad. You can see negative, so that ended up averaging out to, well, not good. And so then EPS trailing 12 months, it was negative 34 cents, but you can see right here, 89 cents. That's because right here you have to do a positive number in both of these actually. And so I then took, okay, averaged out 2016 through 2020. That gave me 89 cents. And so when I tried to make it a little bit better here, I took that 89 cents, combined it with Yahoo Finance's forward PE multiplier, and that gave me $3.52. So still well below where they're trading right now.
Hopefully that all made sense. So when you average out the asset-based model and the 3 scenarios, Canfor's value came out to $144.08. So it's currently trading 369% below that. And then for pulp and paper, when you combine the 2 scenarios as well as the asset-based model, their value came out to $7.92, which is about 12% below what they're currently trading at. So not quite a buy, I just like to put it out there for my personal record if I'm going to buy the stock or not. Don't let this influence your personal opinion, though. So, pulp and paper, I'm most definitely going to avoid because just their intrinsic value is frankly not very good. Although, yes, their asset-based model is very good. I value the intrinsic value over the asset-based model. And even when you average it out, it still came to below their current trading price. So that's going to have to be an avoid for me. Now, Canfor, on the other hand, but the optimistic side of my brain saying, "Oh my gosh, you just found the greatest investments ever. This looks insane." But the realistic, more cautious side of my brain is telling me, "Okay, look, think this through. Chances are, yes, they're undervalued because they have a 3.69 PE and whatnot. Though there's no way they're under 10x their true value. There's just no way. And so realistically, okay, they're probably worth 47.60 from scenario 3. I think that's quite reasonable. And so I'm still going to buy a very good amount of them, but I don't want to go completely all in because I don't know because that top scenario is assuming they meant this lumber price keeps going. They managed to keep growing massively every year and PE ratios in the 40s are still acceptable. Whereas scenario 3 is like, okay, this is assuming a reasonable PE and isn't quite going to have insane EPS, as insane of an EPS and whatnot. So in my opinion, I'm going to put in a lot, but I'm not going to go crazy. I'm going to assume scenario 3 is the most realistic scenario. I rambled on way longer than how I normally do for if I was going to buy or avoid them, but if you enjoyed this video, make sure to smash that like button as well as leave your thoughts or any other suggestions for analysis in the comment section down below. Make sure to subscribe as well. And so thanks for watching. I will see you next time.
Oh, and go watch my Sandstorm Gold analysis too. Get it past 100 views, please. Okay, bye.